Hey guys, welcome to the Sharks Academy, and in today's video I'm going to go through with you some of the trade ideas that we have for the upcoming week. And I know that most of you had a great trading week, okay, especially for my students. For UCAD, CAD-J as well as Euro Yen, these had a runner. 1:30, I would say 1:8 for Euro Yen, and also another 1:10 or so for UCAD. Okay, so the ultimate winner for that week would be, of course, this run over here. So I didn't take this trade, my students did, okay, and I know that for those who have been watching this, right, you understand that this was a clean shift. So let me just break down quickly how do we get this trade, okay? Look at this, on the daily time frame we have a breakout structure, and with a 3-step process we understand that our high time frame is bearish. We are going down to the 1 hour time frame to look for S&D zones, and in this case we have one over here. So why this zone? Why not the one above here? So in Sharks Academy, we work with the S&D zones that are at premium and discounted price, okay? And also following, we're going to look for step 3, which is our confirmations. So now step 1 is done. We have a high time frame structure on the daily. Step 2 would be looking for S&D zones on the lower time frame, and in this case, it's the first hour. And now over here, confirmations, we are looking down to the 5 minutes. So based on all of this, you can see we have a Wyckoff schematic here, we have a Wyckoff schematic over here. Prices broke structure at this level. You can see it clearly on the H1. We have a high, we have low, and before prices makes a new high, can you see what is this? This is the engineering of liquidity. This is the trend line created for prices to grab them before breaking down. This was the shift in structure, and all of these are imbalances left to be filled. Prices came back. You could have looked for rejections to take prices lower, and now this ran for 1:30. So do we hold our positions all the way down into this level? We do not do that. Of course, we're going to manage our positions, partial them accordingly. So this is definitely my TP2 if I have. Otherwise, all of these areas are take profit areas as well, and I probably wouldn't let it run all the way down into this level. I would probably take all of them at 1:16 over here. So it ultimately depends on how you manage your trade, okay? So the next trade that we'll be talking about would be, of course, the Euro Yen. So similar, you can see H8 breakout structure. So this is our 8 hour time frame. After that, look for a lower time frame S&D zone, and in this case this is a 30 minutes S&D. So why do we not want to sell here? Because this is selling low, and unless I look for lower confirmations, I wouldn't take this trade. This was the buy to sell that I was looking for. Prices shifted on the 1 hour. So this was a low, this is the high. Broke structure, pull back, take the sell, and this went for a 1:9. So it's clearer and cleaner on this end. You can see sell side liquidity here. This was my TP2, this was my TP3, of course, and I mean it's not much of a difference. And of course my TP1 was at the immediate range over here. So two partials, and two partials. And of course, the last one will be UCAD on a similar process, 8 hours higher time frame. This is a breakout structure on the 8 hours. Then we are going down to the lower time frame. In this case, the 30 minutes. Can you see that this is a very clean demand zone in the case of an inside bar, followed by a shift in structure on the 1 hour time frame. A shift and a pullback onto a 30 minutes S&D zone. Can you see over here? So I didn't look at the H1. I went down to the 5 minutes to look for the Wyckoff accumulation. So you have a huge one over here, you have a smaller one over here. And I wouldn't have gotten involved because we didn't have a breakout structure at this level. So in this case, selling climax, automatic rally, ST is your SOS, your signs of strength. ST and B, spring. If this shift broke structure, I'm waiting to buy here already. But prices didn't break structure and made for a huge run. This validated another schematic over here on the higher time frame. So I think this can be seen on the 15th. Can you see the same process? Selling climax, automatic rally, ST, signs of strength, ST and B, spring, shift, demand zone, get involved. Simple as that. So this went for a runner. Of course, TP1 will be at this level. So we took profits over here. Our first partials is at 1:2.5, and then 1:7, and of course, ultimately over here for 1:9.6. And this is how we actually had our trade idea. So now moving forward, we have Aussie Yen. First of all, with such a huge move created on Friday for almost all of the pairs, how can we look for continuation trades? Understand that this is the weekly time frame and we still have a breakout structure. So for me, this was a monthly break. You can see the high created over here, the low created over here. So now I'm looking for ways to get involved in the market, understanding that this may be a runner into higher highs. At this point of time, we still have prices breaking structure towards the upside, and that's why our target will be at the highs, and this will be the protected low. So now, with the monthly time frame breaking structure, we are going down to the daily time frame to look for S&D zones. Okay, and if over here you can see that we have a daily S&D that has been broken. That is for me. You can see this wick over here. For me, it has been broken. So go down to the other time frames and look for S&D zones. Maybe on the weekly, on the 8 hours, or maybe on the 4 hours time frame, you can look for S&D zones. Alright, so now you can see on the 4 hours time frame, we have an S&D zone that is valid for buys, and perhaps one over here as well. So all of these are valid areas for you to look for buys. And how are we going to look for buys? Do we immediately just place buy limit? So over here at Sharks Academy, we do not just place buy limits at this level, hoping that it will bounce. Similarly over here. So yes, on the monthly time frame, we have buy side liquidity above. But this doesn't mean that we are just going to place buy limits over here, expecting prices and hoping prices to bounce. So most of the traders out there are doing this. They are looking for S&D zones and simply placing buy limit orders over here. And more often than not, getting ran. What you're going to see over here is a break of structure. You're going to see signs that tells us prices want to move off from here. So at the least, we're going to see prices start to shift on the 4 hours or on the 1 hour. Depends on what kind of a trader are you. So if I'm trading on the 4 hours time frame, I want to see a 4 hour shift. I want to see a 4 hour bullish leg like this. So once prices break structure, assuming that prices need to make a low, a high, a lower low, then this is a break of structure, leaving behind demand zone over here to get involved. Alright, so can you see what happens when prices break structure at this level? This is a valid inside bar for supply. So prices wants to break down, it can break down from here to go lower. So in this case, if prices makes a huge move into this supply, then what you're going to see is this supply failing. So prices taps into supply, fails to make a lower low, break structure instead. Now you can trade the flip zone at this level. This will be a valid demand for you to look for buys. Otherwise, if prices just break structure, for example, like this, a shift, a pullback into demand areas over here, then you can look for confirmations on the lower time frame, understanding that we are still using the 3-step process in a new range. H4 BOS, assuming this is your H4, okay? H4 BOS, then look for S&D zones on the lower time frame. So you're going to go down to the 15 minutes or so, look for a refined area like this. So no doubt we're going to get a few. We're going to get maybe 2 zones like this, and then go down to the 5 or 1 minutes to look for the shift in structure. Okay, something like this. It is ugly, right? But you get it. So this is how you're going to do it. Okay, the shift in structure, the shift from weak hands into strong hands, and then the break of structure for a pullback. This is how we can get involved. So next up, we have the Aussie dollar, and you can straight away see that we have a break of structure on the monthly time frame, like this. And now tapping onto the monthly demand zone. So where did this move ultimately come from? First, we have a huge break of structure and now trading towards the upside of the entire range, like this. And with this monthly time frame in mind, we are looking for a sell side move ultimately into liquidity lows. This is what is going on the higher time frame. But this doesn't mean that we are currently bearish on the lower time frame. Of course, with this Friday's movement, we are bearish almost immediately on the daily. Okay, so how are we looking to get involved in the market if that's the case? Because first of all, understand that we are now sitting on a weekly demand. And let's see whether you can see it on the monthly. So yes, on the monthly time frame, we have this demand zone. So this demand zone acts as a blocker for this. What do I mean by that? If prices wants to go higher, it will go higher from here. Otherwise, over here. So these are your playing ranges. Okay, if prices were to fail to make a lower low from here, then we can expect prices to go higher. But if this demand fails, then we can trade the flip zone, which means to say prices steps into demand, fail to make a higher high. Instead, pulls back by means of this blue candle or this green candle in your case, the break of structure. You can take sells here or here, okay, to go lower. So this point, this is a supply that can be traded if prices were to break this demand level. Otherwise, look for lower time frame demand or supply areas inside of here, like this. This is a valid supply, and maybe on a 2 days time frame, you can use this entire buy to sell here. So both of these areas are valid for sells. This POI over here, and this POI over here. And these can only be traded if your demand fails over here. Can you see? This monthly time frame demand zone is still intact, and we can only trade these two supply zones if this demand fails. And this move will take us lower towards the next demand. So when prices steps into this demand, you are looking for areas to sell from. You can look for buys, of course, into higher areas like this before going lower. Next up for Euro Pound. First of all, ask yourself this question. Where are we in the market? We are on a monthly break of structure. We are at a monthly low. So this means to say that I'm looking for opportunities for prices to go higher. Am I right to say that? We're at the lows. I'm looking for a shift over here for prices to go higher to grab my liquidity highs. So now, with a monthly break of structure, I am going down to the lower time frame, like the daily, to look for S&D zones. And can you see over here, we have an S&D over here, right? And then look on the right, prices taps into, and we are essentially looking for a shift to go higher. So where do you think prices needs to break before it can actually move higher to the liquidity highs? Of course, this level here, right? So now, this means that on the current leg, we are bearish. And if I want to be a seller, I'm going to sell here to potentially go lower, right? And now if I want to be a buyer towards this supply, I can look for a pullback to buy into the supply before it tells me what it wants to do. Maybe it wants to distribute here to go lower. Otherwise, it may try to break lower but fail to do so, then break higher. Now this becomes your entry. This becomes your flip zone to go higher because prices tried to break a lower low like this, but didn't happen. It taps into another POI, break structure. Now you can look for buys all the way into higher liquidity, of course. Okay, so you can see now with this framework, you understand that currently we are bearish, of course, but we're going to only sell from here. And yes, we are bullish on the 4 hours and the 1 hour, which means to say that we can be a buyer into this level. So now, 4 hours demand zone, can you see over here? So go and look at this high. Where is this high? This is a 8 hours swing high. So this means that our step 1 is 8 hours break of structure. Step 2 is S&D zones on the lower time frame. So can you see over here? We have an S&D on the 2 hours time frame, which means to say that I'm going down to the lower time frame like the 15 to look for a structural shift over here to take prices higher. Okay, of course, ultimately looking for this area to be met, understanding that all of these are liquidity areas. And can you see that this move for prices to reach from this high to this low, we have a huge range to work with, which means to say that you can trade the sell side move into this buy side before shifting to go higher. So can you see that we are always selling to buying or buying to selling? If you understand your range, you know where you can buy and sell from and into. So next up for the Euro Yen, you can see this wick over here. This is such a classic move. Okay, we have a retail support over here and prices actually went down, grabbed all of the orders lying beneath this level, and now give us a pullback. Okay, so now on the daily time frame, we have a break of structure like this. This is a valid break of structure, of course. And if I want to be a seller, I am going to sell here. So this is an inside bar. This is a valid POI. So if I want to be a seller, I'm going to wait for prices to pull back into this level before selling. So now with this, we have a daily break of structure, which means to say that I'm going down to the refined area on the lower time frame to look for S&D zones. So if I want to look for S&D zones, I may look for an entry over here. Otherwise, look for a higher area, like, let me just remove all of this, okay, and look for another time frame's supply. And I'll actually use the daily supply itself. Okay, so now daily break of structure, daily supply zone. I'm going down to the 1 hour time frame or the 15 minutes time frame to look for the shift in the structure that is going to happen over here. By means of white call, if you're a retail trader, you can look for rising wedge or rising channels or whatsoever, okay, whichever that works for you. Over here, we know that we are going to look for creation of liquidity, the sweep, the breakdown, and the pullback, like this, before taking sells. So this is what we're going to do for Euro Yen. Over here, Euro Dollar, first of all, understand that we have a daily breakout structure. And then, of course, we have a supply zone like this. So you understand that on daily time frame, this is an entire buy to sell, which is a huge range. We want to refine this supply zone. And I'm ultimately going to look for this supply to be met. Okay, so this is a 1 hour supply zone. With this, prices can make its way higher into this level before shifting on the lower time frame. So now with a 1 hour S&D zone, I am going down to the 5 minutes to look for a structural shift. Understanding that for now, prices are still bullish on a high time frame perspective. You can see this move over here is still bullish. And I'm expecting this to tap into some sort of a demand at the lower end, like this, before continuing higher. And then shift from here, potentially. Okay, tapping into this potential demand, breakdown, breakdown. So this is the framework that we have for the Euro Dollar. So go and investigate, what is this? This is a 1 hour breakout structure. Yes, 1 hour breakout structure. And we can trade this because we understand that we are going to sell from this POI. Okay, if my bias in the market is that I'm going to sell over here, if prices are delivering bullishly over here, I am able to take the buys into the sells. So first of all, understanding that this is a 1 hour breakout structure towards the upside, this means that my low is here and my liquidity highs is here. So now with a 1 hour breakout structure, I'm looking for a 5 minutes S&D at the list. So where do you think I'm going to buy from? I'm going to buy from here. Okay, let's play around the time frames to look for the buy to sell. 8 minutes, we have one. So can you see this is the last sell to buy? And yes, prices are bearish right now and recently broke structure as well. But this doesn't mean that we're going to place a buy like this. Stop loss beneath this level and aim for highs. We are going to look for confirmations, which is our step 3 process. And you can see H1 BOS, 8 MSND, I am going down to the 1 minute to look for the structural shifts. So let's say if prices were to accumulate here, start to make its move lower, break down the sweep, the shift in structure, we can take this move higher, potentially into our sell zone, and then distribute from there. So over here we have pound yen, and of course on the 1 hour time frame, immediately you understand that we are going to look for sells. Okay, on the 2 hours time frame, breakout structure, supply zone, and this means that we can look for sells here to go lower. So if you have a breakout structure on the 2 hours, you're going down to the 8 minutes at the least to look for supply zones. And in this case, the 15 minutes seems clearer. You have this 15 minutes buy to sell. Otherwise, you can work with this this inside bar for sells. Okay, like this. And then of course, go down to the 1 minute or the 5 minutes to look for the structural shift that's going to happen here to go lower. This is the framework of a 1 hour time frame. But if you were to look at this on the weekly time frame, we have a breakout structure. Okay, on the monthly time frame, we have a breakout structure here. And now can you see that the perspective changed? You are now bullish on the higher time frame. It sells on the 1 hour time frame. You might, but you're working with the play field of a demand zone on the high time frame. So for me, I will avoid trading the 1 hour. Okay, so now monthly breakout structure. We are going down to the daily time frame to look for S&D zones potentially, and play around the time frames, of course. Okay, let's look around. Weekly, 4 hours, like this. And then of course, we are going to work with this entire demand zone in it. So this is a demand zone on the 4 hour time frame, which means to say that I am going to look for buys over here. So now with this framework in your perspective, can you see that we are able to take sells now from here down towards the next level over here? So this is how you actually use and rationalize the entire time frame. Understanding that on the 1 hour time frame, you are going to go for sells now because you are going to buy from here. So this will deliver bearishly until prices steps into demand, shift to go higher. So next up, we have the pound dollar, and you understand that this is a breakout structure here. And this is behind a supply zone for us to work with this daily supply. So you can use this entire range and of course confirm this on the higher time frame. So with a daily supply, you want to look for a shift on the maybe the 30 minutes or the 1 hour, or maybe you can even use the 15 minutes if you want to. Otherwise, work with a smaller range. Go down to the lower time frame to look for S&D zones. And in this case, can you see this beautiful supply here? This is the supply zone I'm going to work with. And if you want to participate in the market, you can actually use this entire range instead. Okay, these 2 hours buy to sell. Now, with a smaller range, you can look for lower time frames to get involved. And in this case, I'm looking for 5 minutes shift over here to go lower. So now ask yourself this question: are you going to be a seller at this point? Of course, right? And this means that you have this entire range to look for buys. And now work with the higher time frame. On the 1 hour or the 4 hours. On the 1 hour time frame, you have a breakout structure like this. And what you're going to see is a lower time frame S&D zone. And I think it may have already got tapped into. Let's go and check it out. 5 minutes, you have a demand here. And this is actually valid for buys. Because now, you have a H1 BOS. You have a 5 minute S&D zone. And now what I'm looking for is a 1 minute shift here. Take prices higher. So this is still valid because this is still your liquidity highs. Okay. And I'm looking for a shift here. Otherwise, just look for a move and wait for prices to tap into your supply. Okay, it's still a huge range to work with. You are definitely going to see H1 and H4 structures being formulated. Can you see this is the H4 or maybe even the daily? Yeah, this is the H4 and you currently have a breakout structure, right? Like this. H4 BOS. I'm going down to the 15 minutes to look for S&D zone. So let's go to the 15 minutes. Okay, and if you do not have any S&D zones on the 15, then just play around the time frames. Maybe the 8, maybe the 5, and you realize that you only have the demand zone that we were talking about just now over here, and one over here, maybe on the 8 minutes, like this. Okay, so these are the two areas that I'm looking to buy from: an 8 minutes demand and a 5 minutes demand. So if I see the respective shift, I'm going to take the buys into this level. Next up, we have the dollar Canadian. This is a very nice shift. This is almost a 1:10. And now where are we in the market? Can you see on the daily time frame, we have a breakout structure here. And this immediately brings you down towards this demand zone that caused this breakout structure. And it ultimately comes from here. So if I want to be a buyer, I'm going to buy here. Okay. And if you wanted to, you could have placed a buy limit like this. But this is so dangerous. Okay. You do not know whether this demand is going to hold. Not every supply and demand is going to hold, no matter how big the impulse is. And yes, maybe you can look for a bounce, but this bounce doesn't mean that price is going to go higher. This bounce may just be a move like this to go lower. So now, use the step 2 process. Go and look for a refined S&D zone. And you realize that maybe on the 2 hour time frame, you have this refined area. And this is how we can actually get involved. Okay, so these are 2 hours S&D. And you play around. It's sharing the same refined area as the H4. And now on the 8 hours, you have something smaller like this. So it depends on you. You can already just work with this smaller tight range over here, right? Removing this entire demand zone on the high time frames and just work with this 4 hours like this. So now step 2 is done. You are going down to the lower time frame because you understand that now you have a H4 demand. You can go down to the 15 or the 5 minutes to look for a structural shift like this to go higher. Yes. So now a breakout structure over here will mean that price is going to bring us higher. Okay, and this move, this shift over here does not necessarily mean that we are moving into liquidity highs on the daily time frame, because now you can see we are ultimately trying to reach for these highs. Okay, but this shift on the 15 minutes doesn't mean that price is going to bring you towards these daily highs. What you see is the immediate range getting tapped into like this, assuming this is the pullback point. Okay, so this is our immediate range, and can you see that as prices comes back down, it is going to deliver bearishly, which means to say that you can catch the sells along the way down into this buy zone before going higher. So let's check it out on the 1 hour time frame. You have a huge range from this point all the way into your buy zone. And prices are definitely going to show you 1 hour breakout structure like this. And you can use the 3-step process in this move, this move, this move, and this move, eventually into this level. But first of all, understand that you are not going to wait for prices to eventually tap into this demand, then stop selling here. As prices taps into the entire daily range, you should be wary already, like this. Okay, can you see this over here? This entire daily demand is actually valid for buys. So if you're a 1 hour seller, as soon as prices taps into this may already happen. Okay, what you're doing here is a refined area. Yes, prices may eventually tap into your refined area, but at this point of time, if you are selling this level here, you do not know whether this is a pullback or a reversal, right? This may just break structure like this. Otherwise, look for confirmations at this level to support your buyers. Next up, USD CHF. On the weekly time frame, we tap into a supply zone. And does this mean that we are going for a sell side move towards these liquidity lows? We do not do that. We look at the origin of this level. The last break of structure happened over here. This was the liquidity high that was supposed to be met. And of course, this becomes your protected low, your strong low, your pivot low. Okay? So this means that we are ultimately trying to trade into this high. And where are we going to buy from? On the weekly time frame, you can see this is still a break of structure. And we're going to buy, we are going to buy from this area. Yes. So let's go down to the lower time frame to look for refined zones. And you can see clearly we have a daily demand that is refined. And let's go down to the 4 hours and whatsoever. Nothing much over here as well. So now we are ultimately going to work with this daily demand zone. So yes, on the weekly or on the monthly time frame, okay, on the weekly time frame, we have a break of structure. We have a daily demand. We are ultimately going down to the 1 hour time frame to look for the structural shift. So once prices taps into this level, it shifts, we can take buys. Understanding that this is your first range. Okay, if you're going to be a buyer here, this is the first area it's going to be fulfilled. Because with this break of structure, you are trading this range on the 1 hour or maybe on the 4 hours. And that is why your liquidity high should be here. And whether or not this move happens to tap into deeper areas will be another subject on its own, right? So prices has potential move towards the upside into this supply instead. This one over here. Okay, so this is still a valid supply. Prices may mitigate deeper before moving down to tap into another area like this. Okay, before moving higher. So can you see that prices are actually bouncing around this area? Right? So this might happen. We can see a sell side move into this area to push prices into this supply to break down into this demand before going higher with the premises of this entire framework over here. Because we have a break of structure, a move that came from this level. This is the liquidity high. Prices came back down, shifted, continued to deliver bullishly, and this move may eventually tap into this level. So the shift that is happening over here does not guarantee that price is going to go higher to grab liquidity here. Yes, this move may be a markup into this supply to go lower, into this demand to go higher. Then from this move, this is the one that's going to grab liquidity highs. But we do not know, right? Right now it's just a projection. We are just working with what we're going to see. We are not going to place buys here, sells here, and buys here, right? We are going to confirm every single supply and demand. Next up, dollar yen. You can see prices makes its way higher to grab all of these orders above this retail resistance, where tons of traders are trying to sell over here. So naturally, prices are drawn towards the liquidity pool above here to grab it. So now if I want to be a buyer, I'm going to buy here. Either here or over at the bottom, like this. Okay, demand zone and potential demand zones on the lower time frame. Let's go to the weekly. And you can see that we have a demand zone like this. So I'm going to be a buyer here if I get a shift in the structure, and I'm going to be a buyer here at the lower prices. So we can see this is a refined area for me to work with as well. So all of these prices has the intention to go higher. Okay, and the same thing will happen over here. We have the shift that's going to take us higher. So understand that on the monthly time frame, you are still bullish. We have a break of structure here. But this break of structure actually taps into a demand zone. So this may be a liquidity grab for prices to eventually hit into this liquidity high. Understanding that this move broke structure here. Okay, so now if I want to be a buyer, this can be a markup for prices to go into these liquidity highs, right? And then if you look left again, with whatever data that we have, you have an ultimate break of structure here, which means to say that in this entire framework, we are actually sell-side buyers. We are actually looking for liquidity lows over here to be met. But does it mean that prices is going to fall from here? Prices may tap into the last supply like this. okay, before going lower. So can you see that the entire framework now over here changes when you're looking at this entire market structure? Break of structure here, liquidity lows over here, protected high over here. So whatever that is happening inside of this level, it's a markup for prices to tap into this final supply before dropping off into liquidity lows to continue this bearish movement. But are you just going to wait for prices to reach this level? You're not going to do that. Okay, you're going to trade with whatever that you have over here on the monthly, on the weekly, on the daily, and look for buys into these areas. Lastly, for gold, one look, you are able to tell that we have tons of liquidities lying beneath this level, which means to say that prices may have the intention to eventually move down into this level. Okay, so now we are still delivering bullishly on this current weekly time frame. You can see we still have a break of structure here. Prices are still meddling with the current demand zones at this level. This is a demand zone that is valid for prices to go up from here if it wants to, right? But now you're battling between supply and demand. You realize that this is a supply on the higher time frame, and now you have a demand zone over here. So for me to actually trade this, I wanted to wait for a supply and demand to fail. So if prices taps into this demand, breaks higher, I'm going to trade this demand zone that caused the supply to fail. And now this becomes your flip zone, right? Because prices taps into supply. This supply should break structure, but if it doesn't, means that this supply is going to run. Going to get ran, right? Break structure, taps into this demand, you can look for buys. Otherwise, on the other hand, if prices taps into demand, this demand is supposed to push prices higher and break structure. But if it doesn't, and it breaks down, I'm going to look for sells here to go lower. Okay, to grab this liquidity pool beneath this level. And this is a huge run. So now what is the difference? Let's say this is a supply zone that is valid. And if prices taps in, reacts, breaks down, you have two POIs to work with. The first one over here, and the second one would be over here, right? This is the flip zone. So now with two POIs, you can sell at both areas using your step 2 process and your step 3 process, which is the confirmations. But if prices came up to fulfill this supply, then breaks down, you realize that you do not have to work with this. You just have one zone to work with now. And this is an auto flow entry, right? Because prices tap into supply, break structure, and is coming towards the next supply zone to potentially break structure again. To the rest of the consumers who are looking at our content every single day, every single week, take this chance to participate in the giveaway and experience a chance in our community and our mentorship program. So these will actually close within the next 3 days. Stand a chance to win this giveaway by means of this evaluation form that is given over here. Otherwise, just PM me directly and I will assess you and give you the evaluation form from there. I'll see you in the next one.